I'm Kaylee Lines, and you're watching Bloomberg Technology. Let's start with a check of your first word news. President Trump says there will be no deal to protect immigrants brought to the U.S. illegally as children from deportation, unless it includes funding for his border wall with Mexico. In a tweet today, the president said the Democrats have been told and fully understand that there can be no DACA without a desperately needed wall at the southern border. We must protect our country at all cost. DACA protections expire March 1st unless Congress intervenes. New York City's fire commissioner says a child playing with a stove sparked the fire that killed 12 people, including 4 children. Firefighters responded to the call at the building in the Bronx in about 3 minutes, but by that time the fire had spread throughout. They were able to rescue a dozen people. Several more were critically injured and are said to be fighting for their lives. Police are promising a bigger security detail than ever before in Times Square for the upcoming New Year's Eve celebration. It caps a year that saw a number of deadly attacks, including a vehicle assault at the same spot where revelers will ring in 2018. An army of snipers and bag-inspecting officers will be deployed, along with metal detectors and dogs trained to sniff out explosives. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lines. This is Bloomberg. Bloomberg Technology is up next.
I'm Corey Johnson, in for Emily Chang, and this is Bloomberg Technology. Coming up, tech rally that was the market story of 2017. But after massive gains, can big tech continue its run? And President Trump takes aim on Amazon, once again criticizing the company on Twitter. Should the tech giant be worried? Wall Street sure was. And more from our conversations, our best conversations of the year, with candid discussions with Steve Ballmer and Meg Whitman. But first, to our lead, the rally in tech stocks was the market story of the year. A sector outperforming the broader market, breaking records. NASDAQ 100 up nearly 30% for the year. I didn't see the final numbers, but pretty damn close to that. Join us right now to talk about some market highlights, plus what to expect in the coming year. Veteran tech investor, yes, I just called him old, even though he's not. My friend David Readerman, good to see you, from Endurance Capital hedge fund here in San Francisco. It was a really amazing year. I mean, just across the markets, I think. You know, on Bloomberg Radio, of course, I cover all the markets, but you know, you've been investing in tech for as long as I've known you, and just what a run.
Well, it was a good run, but it was a nasty close today. But in the scheme of things, I think what really distinguished tech was that growth was scarce, and secular growth stories as characterized by the FANG names.
You mean top line growth in technology names?
I mean both top line and I mean earnings growth. And then the stalwart and the largest market cap name in the S&P was Apple, with strong performance as well.
And yeah, it was those big names that seemed to gather around. It also seems that there weren't, at least I didn't notice, maybe you certainly pay more attention to stuff than I do. There were years when software as a service was the thing. There were years when other types of enterprise hardware were the thing, or even consumer-facing stuff. The only thing this year seemed to have been semiconductors, and that seemed to be driven by M&A, not by underlying performance.
Well, you had, as you know, semiconductors is a very diverse group. Right. So, as you've done,
the Philly SOX index, right?
Sure.
All of them.
But you've had subsectors within semis. So artificial intelligence, names like NVIDIA were very strong on that front. You had Broadcom, trading as Avago, having a very strong broad performances as well. And as you noted, then you had M&A activity, Broadcom going after Qualcomm, that really popped that stock towards the end of the year.
So where do you see that growth coming from in the top line? I look at some of the big names that some people were short. Salesforce, a name that a lot of people were short, and that just continued to blow through estimates, and the stock continued to rise. And I didn't again see those sort of big candidates for that kind of thing. Where do you see the best opportunities for growth going forward in the next year?
Well, I think first you have to look global. Tech is a global growth phenomenon. Right. In fact, some of the most successful large caps get higher growth rates international than they do U.S. So I think you have a global digitization towards tech as an infrastructure, the secular shift to cloud, the use of mobile, if you will, your your smartphone is the storefront for
Right.
online shopping, and then the internet as the infrastructure of choice for all both enterprise and consumer activity.
So give me some names you like that you've done some work on here, or names you don't know anything about but you've invested your fund in. You don't do that. No, I know, because you're famous. I'm thinking. Do you remember when we ran into each other at UTI Starcom in a hallway? Because I was there kicking the tire. I was actually doing a story for when I worked at another network, and you were there meeting with management, just trying to learn just a little bit more about that company to make that investment. You've been doing this for so many years. I wonder what all of your research you've dug up.
Sure. Well, thanks. I am an active, bottom-up, kick the tire portfolio manager. I'll probably run into you in one of those hallways at CES. And
thankfully, no, I'll miss it this year. But yeah, so you go to CES and work that conference too for research. First of all, I'll get back to the names, but explain sort of how you work that conference.
Well, CES is a madhouse, but what is really important is the opportunity to engage with management to see the actual products in practice. I think one of the most compelling secular growth trends is the continued movement to the cloud. The cloud's a place, it's called a data center, and the rehosting of both enterprise applications into that data center environment is a compelling CapEx spend.
So what kinds of companies then?
Well, here in the Bay Area, names like Equinix, which are both hosting many of the FANG names that we talked about,
right.
but also the conversion of enterprise compute.
And that's not how Equinix is a place, is a data center operator.
And within that data center
right.
are chips,
right,
both
sure.
AI chips, server chips, comm boxes with blinking lights, a lot of software hosted and distributed globally in a mesh network.
So the data center play, interesting data center play both, and a lot of them are structured as REITs. Do you like that structure for that business?
Well, the REIT has some unique attributes, and that is the requirement that some 80% of the earnings get distributed
right.
out as earnings. Those are real cash earnings. The challenge in a raising rate environment is they tend to be very rate sensitive. So if we are to see a reflate coming off the tax bill that was approved in December,
right.
those could be challenged in terms of valuation. But
in terms of rates, inflation shows up, we see higher rates, and all of a sudden data center stocks that are throwing off what is essentially a dividend, 80% of the profits coming out, trade along with other REITs like real estate REITs.
That's correct.
Which have had a horrible year.
But having said that, we're in an environment where generally the 10-year has been flattening in about a 2.4% yield.
Right.
That actually works to the advantage of some of the SaaS software names, because those tend to be a distant payback opportunity set.
I don't understand. What do you mean?
So as we know, a lot of the tech companies run two sets of numbers, all generally accepted, both
right.
GAAP earnings and pro forma numbers.
Right.
The delta on that being the employee stock options.
But the SEC finally has told them they can't put this stuff at the top of the press release anymore, but okay.
So within the press release are the, if you will, that channel of both GAAP earnings and pro forma numbers. In a raising rate environment, investors want more near-term cash flow as opposed to distant cash flow. So again, if we get this reflate from the stimulus package out of the tax package, I would contend that SaaS companies, those with we're going to land and expand, and maybe we'll give you profits 5 years out, those could be challenge names.
So revenue recognition, such that it is, actually makes it harder in a rising rate environment for companies like Salesforce that don't have a lot by way of profits, as opposed to companies like SAP and Oracle.
You may have, not to go wonky on accounting, but with APB 606,
right.
You're going to shift some of that rev rec to the near-term period. But again, the real swing factor on many of these companies is, can you get leverage out of your business model, both on the sales and marketing side, and quite frankly,
right.
in the case of Salesforce, as Mark and company pointed out in the recent meeting, is how do you improve the monetization of your existing workforce?
Interesting. Just final sort of bigger thought here going forward. A lot of private companies, big private companies on the side, venture capital or raise of massive amounts of the likes of Uber and Dropbox and Pinterest and so on. Does it matter if we see those companies come out?
I think it's terribly important that we get a new next generation of public companies. Just as a historical factoid, if you took the NASDAQ peak, and we were there,
yeah,
right, March of 2000, the top 15 companies, and you say, where are those companies right now? There's only one name in that list that has a higher valuation today than it did March of 2000.
That would be Google? Well, Google wasn't in that list, was it?
That's the point. The only name in that list is Microsoft.
Oh,
gone are Sun, Dell, Yahoo. Remember
WorldCom, Enron.
WorldCom. But on the list today are the Facebooks and the Googles, which weren't even around at that time. So,
right.
So the importance, and that's really the dynamic nature of technology, is that new company formation and coming public and to the capital markets.
David, I really appreciate it. We've been doing this every year on New Year's Eve for many years, and it's always helpful, so I'm glad to have you on. David Readerman of Endurance Capital. Well, maybe we'll go back to the tuxes next year.
Thanks, Corey.
I just did the bow tie tying today. It wasn't going to happen. All right. So we're watching Netflix is scrapping cash bonuses for top executives. A new tax plan eliminates company deductions for performance-based bonuses for managers who make $1 million or more. So there's no longer a write-off. Netflix is just going to use bonuses as salary. Coming up, one of the biggest battles in 2018 could be the president versus Amazon. We're going to discuss why President Trump is taking aim at the tech giant. And Bloomberg Technology live streaming on Twitter right now. Check us out. @Technology is the handle. Every weekday at 5 o'clock on the East Coast, 2 o'clock out west. This is Bloomberg. Well, President Trump has once again criticized Amazon. On Friday, the president tweeted, "Why is the United States Post Office, which is losing many billions of dollars a year, while charging Amazon and others so little to deliver their packages, making Amazon richer and the post office dumber and poorer? Should be charging much more." I didn't do a Donald Trump imitation. That was my missed opportunity. We're joined right now by Bloomberg News reporter Alex Wayne in Washington. And you're welcome to do an imitation of the president. Since he's imitating business analysts, tell me about the business of the post office. Can the post office just decide to pick one customer and charge them more money?
No,
and can the president make it happen?
No, of course. The problem with the post office has nothing to do with Amazon. The problem with the post office is that it's a government agency that's essentially asked or forced to act like a for-profit business, and it doesn't do that very well, of course. Its rates are decided by an independent board. They're generally too low for most of what it does. It's required by law to deliver to every address in the United States. So what the post office would like to see is some genuine reform of how they operate, so that they can set rates more competitively and maybe not deliver to some places that are really expensive to get to.
Alex, we talked this morning, and I pointed out that Amazon, actually, they don't give us a lot of details about how their business works, much to the dismay of people like to model stuff like I do. But they do tell us about their shipping costs. And their shipping costs are massive, far exceeding their shipping revenues. If you look at the annual numbers, the losses that they have in shipping were as high as $7.2 billion last year, and are sure to be probably about 30 or 40% higher this year.
Sure. Yeah, and the reason they get such a good price from the post office, it's been reported that it's about $2 a package, is because they're such a high volume shipper. They're almost certainly the post office's largest client, although of course it's the details of that relationship are secret.
And to that, there's also a lot of competition out there. I mean, the post office is competing with FedEx, UPS, DHL. And many others outside of the country. But again, those companies don't have the requirement to show up at everyone's house every single weekday and on Saturdays.
Right, and potentially Amazon could be a competitor to the post office itself. Amazon's working on several different methods of delivering packages itself, including the last mile that the post office handles right now. So I don't think the post office has a lot of room to raise its prices, and regardless, Donald Trump certainly can't order them to.
When I was at Time Incorporated, we had a business that made a lot of magazines delivered through a lot of post office boxes. And the company actually ran a project in a handful of major cities where they were doing their own delivery of magazines, bypassing the post office. And they made sure there were stories in the local press so the post office could see this, that they were building this capability. And I can tell you now that it's been many years, many decades since then. There was no intention to actually roll this business out. We just wanted the post office to see this as we entered into new negotiations about the cost of delivering Sports Illustrated, People, Time, Life, Fortune, Money Magazine, and the like.
Wouldn't surprise me if Amazon's playing the same game, right?
Well, exactly. So I wonder what you think about that as it relates to what Amazon's trying to do in terms of competition and even putting drones on 60 Minutes.
Yeah, I'd be surprised if Amazon can beat $2 a package for delivery, even probably with a drone. I mean, it's not my expertise to analyze their business, but you know, putting people out on the street in trucks is expensive, and the post office has been doing it for a long time and is pretty good at it. It seems like a reasonable cost for Amazon to have the post office do that for them.
He's not a business analyst, but he plays one on TV. Alex Wayne, thank you very much, and Happy New Year. Appreciate it.
Thank you. Happy
Alex
New Year.
Wayne in Washington, D.C. Well, coming up, Apple apologizes for changes that led to slower performance on older iPhones. Meanwhile, investors don't seem to mind Apple's top stock pick of 2017. This is Bloomberg.
Of the S&P 500 members, MACDs are signaling
I know you're wondering what was the top performing IPO of the last year. Well, if you look at IPOs of over $100 million or more, it was Roku. Roku had a big run, 3 months into the deal. A video streaming service maker set a pace of about 112 companies that went public in 2017. And Roku, I should say, more than doubling since hitting the market in September. On the other end of the spectrum, Blue Apron just seen its shares fall by more than 50% since its debut in June. Kind of sickens the stomach, doesn't it? Well, Apple issuing a formal apology for creating a software upgrade that hurts the performance of iPhone 6s and 6Ss, and said it's cutting the price of replacement batteries for handsets that are no longer under warranty. While the news is drawing the ire of everyone from regular consumers to politicians, the company is on track to close out a banner year in the stock market and introducing a lot of new technology. Bloomberg technology reporter Alex Webb covers all things Apple for us. Let's start with the battery thing. What happened?
So what was happening was that if you had a slightly older battery, extending back to the iPhone 6, last year, almost exactly a year ago, Apple noticed, or some customers started complaining that their phones were crashing. And Apple looked at this and realized that it was because some of the faster processes that were being performed by the new operating system were placing greater demand on the power being pulled out of these old batteries, and they were crashing. So what Apple did was...
So high-performance apps were crashing, other apps weren't, because those high-performance apps were written with the expectation a lot of power would be coming out.
Exactly. And, you know, it's built on the new operating system, which therefore probably had a slightly better draw on the battery. But frankly, this is why they're issuing the new fix, which is that a new battery can cope with this performance.
So this is for your Snapchat filters.
I would imagine things like that, but also some which are actual Apple apps themselves. And, you know, I think, you know, a lot of the things that you can do with say, multiple lenses on the camera and a lot of kind of image stabilization, things like that.
I think it's you know, criticize Apple a lot. I'm all for it. I think companies should all be criticized more. But I think it's fairly amazing the backwards compatibility that they've tried to build into this, as they're really racing ahead with very, you know, this phone is very, very different than the one before it, and the one after this is going to have even more capabilities and even more better power consumption characteristics, a much more powerful chip, lots of different camera things. The fact that the new software can run on the old phones is a very big technological challenge.
I think it is actually interesting looking at this sort of slightly upside down. It is a tacit admission that the hardware in terms of the processor and actual computing power within that phone can still run the new software. And so in some ways it's not this kind of what do you call it, inbuilt obsolescence that they're trying to go for. And actually, that might create a problem for Apple, because one of the reasons the stock is so high this year is because investors are looking towards this super cycle. Now, if say there are 150 million iPhones affected by this out there, and 1/3 of those phone owners decide to replace the batteries so their phone can still perform well with the new operating system, well, that does beg the question, does that mean they won't go for an iPhone 10 or an iPhone 8? Will it affect the ability to hit that super cycle?
And we've seen the time in which people replace their devices stretching out longer and longer, not just phones, but phones, tablets, and computers.
And like iPhone 6 was very much the sweet spot. Those were the guys that those were the owners who were being targeted by the new phones, the iPhone 10s, because it's 2 or 3 years ago.
Right, and there was a belief there would be a big upgrade cycle with this iPhone 10. I say this,
absolutely.
I have the iPhone 10.
Well, you're exactly in the target area.
It's not too late for you to shop for my birthday.
Well, New Year's Eve presents, I guess.
That's fine. You don't have to wait. You can go out right now.
But I mean, this is the thing.
I'll do the rest of the segment by myself. If you run to the Apple store, you're not going to do that.
Yeah, I mean, I think I can't get to Union Square that quickly.
All right, fine.
No, but this is exactly the thing, though. 2 years was the classic upgrade cycle. Now it's extended to 3 years, and the iPhone 6 came out in 2014, so it's very much in that sweet spot.
It's also interesting what a big product refresh they had this year with the phones, the watch, and the AirPods.
Yes, and actually, as a consequence, we did see growth across all of their hardware product categories, and that hasn't happened, or certainly didn't happen last year. We're probably going to see more refreshes.
Tablets too?
We did not see new iPads this year, but we had the iPad Pro, of course.
Right.
The iPad Pro came out, which was, crazy expensive iPad coming out of the top
beautiful.
line. Yeah, I mean, I
was a guy sitting across from me in a plane with one the other day, and it's just the image quality is amazing.
Were his elbows extending out into your area as well? He's a big piece of kit.
I'm a big kid and sitting in an airplane seat. You better keep your elbows to yourself.
You get the business class seats.
Both sides. So as we look forward, though, there's still an expectation, even with a couple of these analysts. I say these analysts as if the analysts who lowered the results are different than the others, but they kind of are, because they weren't really big name firms and they weren't sort of our top Bloomberg rated analysts lowering numbers. Still an expectation of 10% year-over-year revenue growth for Apple in Q4, which concludes this week.
It's interesting the kind of relativism we have when we're talking about Apple. Apple is still growing at a hell of a pace. It's just that pace is slightly slower than it was 2 or 3 years ago. That's why when people talk about a super cycle, they're looking for a repeat of what happened back in 2015 or 2014 as well. Right. So it's still growing, just not perhaps as fast as it was a few years ago.
Alex, great time with you this year on TV and on radio and just walking around this newsroom and this great city. Really appreciate it. You've done such a good job. Take the rest of the year off.
Thank you very much. Please send an email to my boss now.
All right.
Cheers.
Well, coming up, believing in Bitcoin, the Winklevi. They think the currency will shine brighter than gold, and they're going to tell us why. And if you like Bloomberg News, check us out on the radio. You can check me out on the radio on my show on Bloomberg Markets, Bloomberg Radio app, Bloomberg.com in the U.S. and Sirius XM station 119, and download our podcast coast to coast on iTunes. This is Bloomberg.
I'm Kaylee Lines, and you're watching Bloomberg Technology. Let's start with a check of your first word news. New York City's fire commissioner says the blaze in the Bronx last night was started by a 3-year-old boy and his mother fled the apartment with her 2 children, leaving the door open. He provided more details about the inferno earlier today. Last night's tragic fire, other than 9/11, was the worst loss of life from fire in our city in almost 28 years. The Happy Land fire, which occurred in 1990. So we're in the midst right now of the worst month for loss of life in our city for fire in the past 10 years. 12 people, including 4 children, died when the fire raced through their building. Meanwhile, in another deadly fire, this one at an upscale restaurant in Mumbai, India, 14 people were killed and dozens more injured. An artificial bamboo ceiling in the restaurant reportedly burned quickly and collapsed as people tried to escape. Turkey has finalized its purchase of an S-400 anti-missile system from Russia. The deal closed despite concerns voiced by some of Turkey's NATO allies. Turkey is now the first member of the military alliance to own Russia's most advanced air defense system. It comes as Turkey strengthens ties with Russia, and Ankara's relationship with the U.S. and other Western nations continues to deteriorate. A Russian spokesman says the failure to restore ties with the U.S. in 2017 is a major disappointment. Dmitry Peskov blames, quote, anti-Russian hysteria from alleged meddling in the U.S. election. The Kremlin hopes the relationship improves, but says it takes two to tango. For just the second time since the September 11th attacks, a U.S. Defense Secretary did not visit troops in a war zone in December. Pentagon boss Jim Mattis broke a long-standing tradition this year of U.S. defense chiefs personally and publicly thanking service members in combat that are separated from their families during the holiday season. The only time a holiday visit was skipped since Americans began fighting in Afghanistan was in December 2002 by then-Secretary Donald Rumsfeld. And bundle up. Record cold continues to grip much of the northern U.S. Temperatures are below zero from New England to the northern plains. Dozens of cities are setting daily cold records because of the Arctic blast. The deep freeze is expected to hang around through next week. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Kaylee Lines. This is Bloomberg.
This is Bloomberg Technology, and I'm Corey Johnson. Well, Bitcoin trading, remember the big sell-off yesterday? Never mind, Bitcoin's back up again, although down actually for over 2 days, 5%, but bouncing off those lower levels, getting well above 14,000 for the day, closing at 14. No, it doesn't close, but 14,351 if we round up there. But this is after now South Korea curbed speculation on the product and suggested that retail customers might not be able to trade it everywhere they were. That was enough to hurt it yesterday. Still, the digital currency has slumped about 27% from the record high reached in December 18 when it was 19,511 when the CME Group introduced its futures contracts. Among the largest holders of Bitcoin today, Cameron and Tyler Winklevoss, the Winklevi. They founded a cryptocurrency exchange called Gemini. We caught up with them to explain why they made such an early big bet on this asset all the way back in 2013.
Well, we think that Bitcoin is like gold 2.0. So whatever the reasons, your reasons for investing in gold, whether it's scarce, durability, portability, fungibility, we think that Bitcoin matches or beats gold across the board in all of those categories. It's actually not scarce, it's fixed. You can send it around like you send an email. It's a lot harder to do that with bars of gold. So the market cap right now of Bitcoin is 300 billion. The market cap of gold is 6 trillion. We think that Bitcoin disrupts gold. We've been saying this since the market cap was 1 billion in Bitcoin. We're 300 times more correct today, and we think that there's a chance we'll be 20 times more correct from here on out.
Is there any reason to believe that in fact people are selling gold and buying Bitcoin?
We're not. That's very possible for sure. I think anybody who likes the characteristics of gold in their portfolio definitely will be attracted to gold. I mean Bitcoin, excuse me.
I love that you mentioned that because Jeff Curry actually had a note out talking about that. And from his research, on the flip side, that he hasn't seen that yet because ETF flows haven't seen outflows of gold per se, and they look at a different kind of supply and demand dynamic, Julie, than what Bitcoin will be.
So you said you could be 20 times more correct than you are now, right? In other words, that we could see another 20 or even 30-fold, I think you guys were quoted as saying, increase in the price of Bitcoin. But sort of how do you get there? Because even people who are positive on Bitcoin, many of them say we could see a sharp correction. Then it might go back up. But, it could be a rocky road to get there.
I think part of that is creating access to it. So we built Gemini.com, which is a licensed exchange and custodian. We're a New York trust company. We've launched 2 years ago. We're onshore, headquartered in New York. So it makes it easier for hedge funds to get involved. We have some of the world's most sophisticated market makers and prop trading firms already on Gemini. Sort of phase 2 of that is creating a futures contract, which we've done with the SIBO, a Bitcoin futures contract that's cash settled, which allows institutions that are already trading up in Chicago exchanges to get exposure to Bitcoin with cash and that settle out in cash. So they don't actually have to touch or feel Bitcoin, and they get the exposure to it. And I think the next phase to that would be something like an ETP ETF product.
Which you guys had introduced. You had a filing in with the SEC. The SEC pushed it back to you like it has with all of the ETF filings. Are you planning to refile? What's the next step in the process?
So we're actually we're in process. We don't have to refile because we're on appeal. So the disapproval ruling is appealed right now, and we're just waiting to be heard by the commissioners.
So what's the next step with the CME? Because we have the SIBO up now and running. CME is right around the corner. It will be based differently, as I understand it. The price will be taken not from Gemini, which is what you co-founded, but actually from a combination of different exchanges.
That's right. Our contract settles to the Gemini auction. We really love our product because we think it's simple and very easy to understand an arbitrage between the futures price and the underlying spot. The CME product, we certainly welcome them to the party. Theirs settles on a blended index, so it's a different flavor, but we welcome more products and more price discovery in this market.
When the contracts were being launched, one of the issues was that daily auction volumes can be really light on Gemini, and that you don't always wind up producing a price, and that can actually be really difficult then for the exchange. What have you done to address something like that?
So auction mechanisms are very tried and true. They're used around the world to price assets in all kinds of markets like equities. So we think, the mechanism that we've chosen is very straightforward and simple, and it will naturally, organically grow as this contract grows. So we're not really concerned. And, we run auctions every day, even holidays and through the weekends. So those might be a little more thinly traded, but on weekdays, that's really where you want to focus on, where the contracts are going to settle. It's the largest global liquidity event in the entire Bitcoin market. It may be small.
It's like 1.3 million average daily volume.
But at that point in time, that's the key. If you look at 4 o'clock and you look at the constituents of another blended index, and you look at 4 o'clock in time, $1 to $2, $3 million print is actually quite large. It's very elevated liquidity and increased price discovery. And a lot of these auctions are also self-fulfilling. All of a sudden, you have a contract pricing to it, so it builds the reason for it or the relevancy of it. So it's sort of like unfair to sort of take a snapshot in time before there's actually something tied to that price.
Of course, you guys are just one exchange, as we've been talking about, and many times you see pretty divergent prices on these different exchanges, which can make it more difficult to trade Bitcoin. It can certainly make it more difficult to transact in Bitcoin. What do you think causes more price stability, and does Bitcoin need to be transactional at some point more than it is right now?
So it depends on which exchanges you're talking about. Not all exchanges are created equal. We're a New York Trust company. We are the most regulated Bitcoin exchange and custodian in the world. When you look at the prices across U.S. exchanges that are actually regulated, it's a very small deviation. They actually very much track each other. If you're talking about unregulated offshore exchanges in different jurisdictions that are highly risky, of course there's going to be risk premiums. Sometimes people can't get their fiat currency in and out.
Well, but we're talking about Coinbase too, right? I mean, Coinbase is U.S. based, and its price has been quite different at times from some of the other exchanges.
I think it's all about getting more sophisticated players into the ecosystem. The Bitcoin futures product that we have been building and that is live right now, the first ever Bitcoin futures product with the SIBO, will create for the first time an easy way to short Bitcoin. And so there will be a two-sided market, which will reduce volatility in the long run, increase price discovery, and increase liquidity.
We shall see. Tyler and Cameron Winklevi, founders of Gemini. Coming up, Microsoft CEO Steve Ballmer talks tax reform, Twitter, and his new venture to make government data more accessible. This is Bloomberg. Well, he's a Twitter shareholder and happens to be the former CEO of Microsoft. Steve Ballmer says tech companies cannot do more these days to police the spread of fake news. Caught up with Ballmer in Seattle and spoke with him about the government data website called USA Facts, which he released earlier this year. Take a listen.
We launched our platform with data from the government about the government. No fake news, no alternate facts. We launched on tax day. We keep adding more data and we keep the information current. But the real thing we're doing now at usafacts.org, in case somebody wants to check,
Got that
is we're trying to help citizens really run through topics of the day. So we have a walkthrough up there right now that'll walk you through the president's budget in the context of what has happened historically. What does GDP look like? What has tax revenue looked like? What's the deficit look like? And how does all of that compare to the CBO? We make no predictions. We're going to make sure people can walk through and look at these government proposals in the context of the past. That's all that's factual, and then be able to say, does this make sense to me or not? We have a little video that goes along with it that'll explain to citizens, this is kind of the set of data and the way to think about, by the numbers, how do you think about something like the budget proposal?
You say it's just the facts, and I know you now know these facts better than almost anyone. As our lawmakers, as the president, as they talk about tax reform and health care, do you have any advice?
Yeah, in a way I do. These things are holistic issues. It's sort of funny to me. We look at tax reform, we look at the budget, and we look at health care. And yet when you really look at the economics of these three things, they're linked just like this. I mean, what does it mean to have a budget without tax reform? It's our process. I'm not condemning anybody, but it's kind of nutty. You have to have a tax plan in order to have a budget. Be like a company having an expense plan without a revenue plan. It just doesn't make sense. And then one of the biggest pieces of expenses, that's health care. And you don't have a health care. I mean, how do these things, so really understanding how these things mesh together would be a key piece of advice I would certainly give decision makers, legislators, and the executive branch.
You mentioned this is an age of misinformation, of fake news. How big a problem is that? And what's the responsibility of these platforms, Facebook, Google, Twitter?
I think this notion of people being able to sort of be fed whatever's going to make them feel good, because that's what people are really doing. People want to feed whatever the instincts are. And I think the goal has to be to say, this is how it looks. You can see it any way you want to, but someplace you have to come and be able to take a look at stuff objectively. I'm not sure you could say that's Facebook's job. They're not in the news business. They pass along other people's news. Same thing with Google. That's part of the issue here, is things can look authentic. We did a USA Facts poll, and when surveyed, people will say, I find my information most often on social media, and I trust it the least.
So do you think Facebook and Google and Twitter should be policing this more, or that's not their job?
They can't. It's not in the nature of what's going on. I do think over time there needs to be something that's the equivalent of a authenticated user on Twitter, where you get the little bullet that says you really are who you say you are. I think it'd be nice to have authenticated sources, so that people can say, I really want to see not just what the crowd is saying, but I want to hear from some authentic sources.
What if that information isn't coming from the crowd, if it's coming from our own president? Is it a problem if he's the one spreading misinformation?
Well, we elected the president, our country as a whole. He is our president in chief. And I know there's people who have problems with that and people who are supportive of that. But at least when the president speaks, he's speaking authentically for himself. And in a sense, that is a set of facts. When a major policy leader speaks, you could say it's true, it's not, you like what he says, you don't like what he says, but it's what he's thinking. And every voter probably benefits by having the ability to hear directly, just as we hear directly from other people. I get a chance to speak directly on the internet. LeBron James gets a chance to speak directly on the internet. Not everybody wants to hear what people say to one another. They don't always agree. Certainly we've seen that with LeBron and the president.
There are some who say the president is taking it to another level, perhaps even inciting nuclear war on Twitter. Should he be kicked off Twitter? Should he be allowed to make these statements on Twitter?
Everybody has the right to speak for themselves. And that includes the President of the United States. Everybody has the right to speak for themselves. That's kind of in the fundamental nature of this country, and I think it's an important one. I think the citizens have an obligation to elect the people who they think will best represent their interests. And that gets a chance to get battle tested every 2 years, every 4 years. And I love our system because people have to constantly prove themselves. And if people are doing things that are not valued, that'll come across. And if people are doing things that are valued, Now, the way our system works, it doesn't take 100% to win. It takes logically 51%, of course, with the Electoral College. That's not really what it is, but it takes logically 51% to win.
And that was former Microsoft CEO Steve Ballmer talking to Emily Chang. And as a reminder, Bloomberg LP is in partnership with Twitter to produce a global breaking news video network which you should be watching. It's called @TikTok. Check it out. Well, up next, we hear from HPE CEO Meg Whitman as she prepares to leave the company after almost 7 years at the helm. This is Bloomberg. Well, HPE CEO Meg Whitman preparing to step down from the company in February. We spoke to her in November and discussed her decision to leave and why now is the right time for her and for HPE.
I've led a transformation that might be one of the biggest transformations in global business history, from a single company, enormous company that was really facing a lot of challenges to 4 very nimble, agile companies with Hewlett-Packard Enterprise, the one that I still run, really well positioned for the future. And this has been in the works for some time, and just decided that, it's right for the next generation of leaders to take Hewlett-Packard forward. And as you know, Emily, you and I have talked before, I'm a big believer in the right person in the right job at the right time. And I think Antonio Neri is going to be a fantastic next CEO.
So why do you think Antonio is the guy for the job, somebody who's been there for decades?
Well, I have said from the beginning of my tenure at Hewlett-Packard Enterprise, the next CEO of this company needed to come from the inside. When you come from the outside, which I did, the length of time it takes to understand the people, the products, the culture, the market, it takes a long time. And Antonio and I have crafted the strategy for Hewlett-Packard Enterprise together. He will now execute that strategy as a standalone company, and he's a deep technologist. And the next CEO, I think, needs to be a deeper technologist than I am. Listen, you will recall I'm more of a consumer technologist. I had to learn enterprise technology in his bones 22 years. He is an enterprise technology executive, and I think he's going to take this company to a place I never dreamed I could.
Now, some of the critics would argue that HPE needs a landscape shift and that appointing an insider who's been there for a very long time isn't a veer away. How do you respond to that?
Well, think about the transformation that we have undergone as HP as a whole, but also in terms of Hewlett-Packard Enterprise. We shrunk down to about a $24 billion company. Then we've made 6 or 7 acquisitions in the last 6 months, the largest one being Aruba, which is a fantastic acquisition, has opened up a whole new growth frontier for the company in what we call the intelligent edge. And Gartner published a study that said the edge is going to eat the cloud because so much data is being generated at the edge that it will require compute and storage at the edge to get those insights. So I think the company is in actually very good shape. We are less dependent on the commodity server business than we were 6 years ago. We've got value products and growth products. We're the leader in high-performance compute. We've created a whole new category called composable infrastructure with our lead product called Synergy. We've developed flexible consumption pricing so that you can keep workloads on-prem and pay for them as you consume the compute and storage. So I think we're actually in quite good shape with a very coherent strategy that's matched to the needs of the market now.
How do you turn around enterprise spending when more and more companies are outsourcing to cloud service providers?
Yeah, well, so of course that takes a certain percentage of our market, largely the commodity server-oriented business. But there are still many workloads that are staying on-prem. And a recent trend we've seen is really a multi-cloud strategy. Some workloads might be in a public cloud, maybe multiple public clouds. Some might be in a managed service provider. And some will remain on-prem. And we've seen some companies moving workloads back on-prem because it's gotten so expensive in the public cloud. So what we have to do is enable a hybrid IT solution for customers and helping them figure out what the right mix is where their workloads should live. And that's a capability that we're growing. We acquired a company called Cloud Technology Partners. That's what Cloud Technology Partners does, is help companies figure out where those workloads should go, and we need to enable the future. And then, of course, the edge is as much pressure as the data center is under. The edge is not, and the edge is growing like a weed.
And when you say that data is going to eat the cloud, what exactly do you mean by that?
the edge is going to eat the cloud. So what's happening is there is an explosion of data at the edge. And my definition of edge is anything that is not your data center. So think about sensors in jet engines, sensors in hospital beds, sensors in irrigation equipment. There's tremendous data being generated at the edge on every factory floor. And that data is being generated, and the companies want real-time insights from that data and the ability to make real changes to what they're doing on the factory floor or a North Sea oil rig or a hospital bed right then and there. And what's happening is the consumer insights and the industrial insights are now happening at the edge as opposed to in the data center, and it's dragging along compute and storage. And the growth is tremendous. And, you know, my prediction is, honestly, in another decade, the amount of compute and storage at the edge will outstrip the amount of compute and storage in the data center.
That was outgoing HPE CEO Meg Whitman talking to Emily Chang. Well, that does it for the last Bloomberg Technology 2017. Reminder, we're live streaming on Twitter. Check us out at Technology weekdays, 5 o'clock back east, 2 o'clock here on the West Coast. That's it for this year. Have a happy new year, everyone. Bloomberg Tech will be back on Tuesday. This is Bloomberg.